Okay guys, welcome back to another video. I'm Matt with FX Replay, and today we're going to jump into the charts and talk about managing your risk and how to effectively do it with FX Replay. So let's dive in. So first of all, we have to understand what even is risk management. It's essentially the way to stay in the game, right? Because there's no making money in this game without having money. You have to have that capital. And so in order to make it, you have to protect it. And so that's the purpose of risk management. Now, how can we go about protecting our risk or managing our risk? One of the ways that we do it is to risk a portion, a small portion of our account. So for example, on every trade, we're going to be taking 1% or 0.5% or 2%, depending on a bunch of factors, right? It could be your mental account balance, meaning how much can you afford to lose and how much are you okay with losing and risking. It could be just based off of your strategy statistics, right? All of these things can come into play. And so essentially what you want to be doing is you want to be risking a small portion of your account that will allow you to lose like a bunch of trades in a row and not blow up and still be in the game. That's the whole purpose. And a great way that you could do it is using a regressive risk system where, say, you take two losers in a row and you were originally risking 1%. What you can do is drop that down to 0.5%. And then if you take another couple losers, you can drop that down to 0.25%. And so you have this regressive plan. So then your losers become smaller and smaller and smaller until you start getting some wins back up and start getting back into the game, right? And so that's one way to do it. Another way to do it is, for example, if we are going short here, right? And my stop, say, for example, is up above here and my target is down at, say, 2R, something around here. Okay, I have to ask myself, okay, well, how can I manage risk? So say I put in this position right here. So let's set that up right here, 1%, boom. Okay, so we're going to be tapped into this position. Now, the other ways that I can manage my position or manage my risk is going to be using a stop loss and dragging that stop loss to cut off the risk. So if I'm originally risking $1,000 right here and say price moves in my favor, let's see, hopefully it does. Wow, perfect. Okay, it moves in my favor. And now I can put my stop back down to break even. So now the risk is completely off the table. And this can really, really help with your trades, right? To prevent losing and prevent going into drawdown. Of course, it has to make sense and based off of your strategy. When can you move to break even, et cetera, et cetera. You don't want to move too soon and then choke off your trade, right? But again, that's a great way to do it, is by managing your risk. And with FX Replay, you can easily just drag and drop just like that. Okay, so say, for example, another way that we can do it is if we go to the next candle, okay, right here, my target is down here. If we hit this low, I'm going to be taking partials. Okay, so that's a great way that we can be doing that as well. So let's just take it right here just for the sake of the idea. Okay, we can click right here, click 50% off your position. So we can start taking partials. And again, you don't want to be taking partials randomly and everywhere. You want it to be following a specific strategy so that you can be, it's tested and you have data on it and you know exactly when you should be taking your profits based off your strategy. Is it 1R? Is it based off of an R multiple? Sorry. Is it based off of structure? Is it based off of this? Is it based off of that? That's something that you have to decide for yourself, but another great way to manage risk. Okay. And so finally, another great way to practice your risk management or grow from your risk management is to just go through this dashboard here, right? Go back to your dashboard, go into your analytics and see what your strategy says about your risk, because this is great data that you can get from your strategy, guys. For example, I had 16 trades here that could have been profit or break even. And this is based off of 1.5 risk to reward. So if it hits 1.5 risk to reward and it goes back to break even, it goes back down into a loss, well, these tell me that it could have been a break even or it could have been a profit. And you can see it right here. Okay, all of these. So you have to ask yourself, hey, maybe this is a rule I can put in. Instead of 16 losers I had here, maybe at 1.5R, I should go break even. Like, how does that affect my data? And we can, manipulate it and see how that actually affects it. So that could be a great way, is by looking at the could be profit and break evens. Okay, another great way, and the final great way here for right now, because we have a lot more data coming regarding our risk management, which is going to be excellent. But as of right now, the things that you can look at is going to be your performance by day. And you can start to say to yourself, which days am I losing a significant amount and which days am I winning a significant amount and which days are not worth it in general to be trading. So I've been looking at my Thursdays here and we're at a negative balance on Thursdays after 122 trades. That's a lot of data to come to a conclusion to say, hey, maybe Thursdays I can either reduce risk heavily or I can just completely eliminate them and say, hey, I perform horribly on Thursdays. So let's cut that out. And now our risk is going to be managed because I'm actually going to be cutting back a significant amount of these losses, right? That net result of this Thursday. Okay. Additionally, there might be days that I'm basically break even. So again, these are days that I can simmer down and I can size up on the days like Friday where I have very minimal losses and very substantial wins, right? So again, these are all great risk management parameters that you can be looking at and assessing based off of your strategy. And that's actual data based off of how you execute your strategy. So that's a great way to do it. And that's basically it, guys, for the risk management. I think that, we have a bunch of great options here for what you can be looking at and how you can assess your risk. Again, like I said, there's going to be a crazy amount more that we're going to be getting. So definitely stay tuned, check that out. And guys, I'll catch you in the next one. Thanks so much for sticking around. Cheers.